Volume profile is a trading tool used by professional traders. Being able to read it and interpret it correctly will give you an edge that most traders will never have. So congratulations on stumbling upon this video, and let's get started. What you are looking at right now is a thing which I got from my friend, and it's called a golden board. It's a tool that shows how probability works. Now, imagine that each ball represents one trade. As the balls fall, most of them end up in the middle. That's where most of the trading happened. Only a few reach the far edges. Traders were not much interested in trading there. And volume profile shows the same thing, where most trading activity happened and where the heaviest volumes were traded. The place where the highest volume was traded is called the point of control. I like to say it's the most important level on the volume profile and the most important level on the chart, because that's where most of the trading activity took place. For that reason, the market often reacts strongly to this level. It frequently works as a key support or resistance zone. The highlighted zone you see here is called the value area. It covers roughly 68% of all the traded volume. This area represents the price where the market traded the most. In other words, where the market found value. The top of it is called the value area high, the bottom is the value area low. If you think back to the golden board, the value area is just like the cluster of balls that landed in the middle. That's the market balance zone. The point of control and value area show where the market spent time and where most of the trading activity took place. But there are also low volume areas. These are price zones that the market didn't really accept. It just passed through them quickly and moved on. Now that you know the main part of the volume profile, let's take a look at how it actually forms over time. Just like with the golden board, every trading day starts fresh. There's no volume at first, but as traders begin placing their trades one after another, the volume profile starts to build. By the end of the session, the final shape of the profile depends on how the trading volume was distributed throughout the day. There's a couple of main shapes that the volume profile can form. There's the D-shaped profile, there's the P-shaped profile, then the B-shaped profile, and then there's the thin profile. Each one tells a different story about what's happening in the market. The D-shaped profile is the most common one. It tells us that the market is in temporary balance. Buyers and sellers agree on value, and price just rotates around that. The P-shaped profile shows that buyers are in control. You'll often see it during an uptrend. But if you spot it after a downtrend, it can also signal that the move down might be ending. The B-shaped profile is the opposite. It tells us that sellers are in control. You'll usually see this shape during a downtrend, but if it appears after an uptrend, it could actually mean that the uptrend might be ending. And finally, the thin profile. It forms when the market moves so quickly in one direction that almost no volume builds up, only small volume bumps. It's a sign of strong momentum, often sparkled by big macro news. So that's for the theory, but how do we trade this? Let me share with you the most basic volume profile trading strategy, and I'll demonstrate this on a trade which I took yesterday on the US dollar Japanese yen. Let's take a look at it. So what you see before you, this is US dollar Japanese yen chart, 30-minute time frame, and the trade which I took was a short, and it was short from here. Now let me show you why I took that short. If you look at the weekly volume profile, that's this huge profile on the left, it shows how volumes are distributed throughout the whole previous week. That means this whole zone, right? The weekly point of control was right here. That means that throughout the whole previous week, the heaviest volumes were traded in here. right? That's the weekly point of control. So the way how you can trade this is you wait until the price moves away from the point of control. You can see that in here, the price moved away from that point of control, it went downwards. Then I was waiting for a pullback, and because it went downwards from the point of control, I went short from here, from the point of control, right? That was it. Pretty simple, right? You just wait for the pullback to the point of control and then you enter the trade. And it doesn't need to be a weekly point of control. It could be, for example, daily point of control, which means the place where the heaviest volumes of that day were traded. You can see it in here. This is daily volume profile. This is the point of control. And as you can see, it nicely aligns. In this case, it aligns, but it doesn't need to align. But in this case, it did align with the weekly point of control. All right, so I waited for the pullback and went short from there. That's it. That's how you can trade with the volume profile. That's the simplest strategy, how to use it. Obviously, there's way more to this. And if you find this interesting and if you want to learn more about volume profile trading, what I recommend is visiting my website, which is traderdale.com. And if you click this button, Trading Course and Tools, then in here, you can browse my trading education and custom-made indicators. If you are interested in volume profile trading, then you want to take a look at the volume profile pack right here, which includes a 15-hour-long volume profile course, my daily and swing trading signals, which means you can trade alongside me every day, trading the same levels as I do, for example, the level which I showed you on the US dollar Japanese yen right now. And also the volume profile pack includes my custom-made volume profile indicators for various trading platforms like TradingView, MetaTrader or NinjaTrader. As you can see, there are also more packs here. You can get them separately or in one huge discounted bundle. You can get all 4 packs together for a discounted price in here. Now, before we wrap this up, I want to address one common mistake that many traders do. If you look at volume profile, it often has 2 colors. For example, on TradingView, it's blue and red. People often think that one color shows buyers and the other shows sellers. But that's not exactly true. Those colors only show whether trades were executed at bid or at ask. They don't actually tell you who was in control, whether buyers or sellers. This topic is a lot more complex and I don't really want to go too deep into there, but the main thing to remember is that volume profile does not show buyers versus sellers. That's why my custom-made volume profile uses only one color. It might not look as flashy, but it avoids giving people a false sense of control and keeps the focus where it should be, on the shape and context of the profile itself. Alright guys, so that's about it for today. I hope you liked the video. If you want to delve a little bit deeper into volume profile, I have a little gift for you. It's my volume profile book, an Amazon best-selling book on volume profile trading. If you want, I'll send the paperback to you. Just click the link below this video, fill in the address, and I'll send you the book for free. I'll even cover the shipping, so just order the book, I'll send it, no strings attached. Enjoy it, let me know how you like it. Alright? So that's about that. Thanks for watching and I'll see you next time. Until then, happy trading.